I mean, the signs that it's maturing, I actually think this is just a temporary, momentary pause before growth resumes. So we're still in the very early innings of retail media, but the easy money is gone, and retailers are learning that they can't just have money flooding in because of the rise of e-commerce, and they can't continue to lean on their suppliers to spend more on retail media. They're saying they're tapped out. So now they got to start acting like real media companies if they want those national advertiser budgets, which I think they have a great claim to, but it's going to take a different skill set, better execution, and acting more like a media company. So this will be a couple years of progress to fully realize that vision. But I think we're still in a very healthy place right now.
Let's lean into that media aspect of retail media networks' identities, particularly as this next phase, they're moving a lot more into offsite with CTV and social. So with that, what's the biggest challenge that brands still underestimate there?
Yeah, I think they're running into a couple of issues. Some of it is technical in that you got to connect the pipes from their data to a CTV provider. And not all of those partnerships will materialize. So there's a bit of a chicken and egg problem that they might run into with some of those partnerships. Maybe the bigger issue ultimately is pricing. That their advertisers are used to getting ROAS numbers. They're performance advertisers, and all of a sudden now you're doing upper funnel media with an RMN premium, data premium tacked onto it. So the resistance you get from advertisers is, well, why am I buying from you, retail media network, when I can just go and buy the same audiences directly? Now, they can't necessarily get the same audiences directly, but they think they can. And also when the CPMs are high, ROAS doesn't look as good. So they're in a bit of a ROAS trap right now with those media, even though I think they have a strong right to play, and actually advertisers would be smart to pay the premium to get the most valuable audiences.
So I think solving that ROAS trap maybe is partly, at least, the solution is a measurement issue, right? So, and measurement does remain a pressure point for retail media networks and advertisers. What's improving fastest right now, and what's still fundamentally broken there?
Yeah, I mean, I think that at this point in time, most major retail media networks have done the basic blocking and tackling of the suite of core KPIs that you need to run a business, and that is defensible and replicable. Now, what they largely have not done is made a big shift into incremental ROAS, which is a better metric. But the trap that they run into there is, well, if you have an incremental ROAS, which is a real number, a real incremental return, that says $1.50, that's a 50% return, by the way, it doesn't pencil out against a ROAS number of $4 or $5 from one of the major platforms. So they don't want to have that lower number, even if it's a truer number. Now here's the rub for retail media networks. They perform better, generally speaking, on iROAS than all those other platforms. So the sooner that they can shift the conversation from ROAS to iROAS, the more they will start to see those budgets from Meta and Google and open web programmatic start to steer their way. So they have every incentive to do it, but it's going to require a lot of figuring out methodology and herding the cats around some sort of consensus on how you measure iROAS. But I think they need to aspire to it, and I think they should pursue it a lot more aggressively than they have to this point in time.
Another issue we keep hearing associated with retail media networks and their maturation is that the space is increasingly crowded. More retailers, more networks, more data. Is consolidation inevitable then, or does fragmentation and lead to more fragmentation?
Consolidation in any media market is inevitable. And we saw this in the rise of the early web with publishers. You had the rise of ad networks. You need to be able to get scale at some point. Now, the interesting thing is a lot of people in the space will say it's basically a two-horse market. It's Amazon and Walmart and everyone else is fighting over the crumbs. It's not really true. You actually have quite a few businesses that are already billion-dollar businesses, several others that are multi-hundred-million-dollar businesses, and a lot of those second, third-tier RMNs have plenty of running room still. So both things are true. You can have, I think, at least 30, maybe 40 solid walled garden opportunities in terms of US retail media networks, but you're also going to have to aggregate other segments of the market. So regional grocers would be like the most obvious one, right? Few, if any, of them have a right to exist as a standalone, but when you aggregate that market together, it's actually very compelling, and I think will grow the market for all of them.
Andrew, at CES, I have to ask about trends. So with respect to the growth and continued ubiquity of retail media networks, commerce media networks, are there any particular trends that you're eyeing, that you're really interested in right now?
Yeah, I think 2026, I've got two right at the top of my list. The first one is performance TV. That's CTV underpinned by retail media data. So narrower targeting and closed loop attribution. This is a major innovation. It's one of those things that's been inevitable, but the time is now because Amazon is plugged into so much of the premium inventory, about 50% of the CTV market they can plug into now. So that's huge. Now we also have Walmart and Vizio getting real. So this is the moment, and CMOs aren't going to be able to ignore it anymore. And then the other one, which maybe is going to still take a little bit longer to materialize as an ad market, is in-store retail media. But the reason that trend is now is because it is live and rolling out in major retailers, CVS, Kroger, Albertsons, and probably a few other big ones announcing things along the way this year. So I'm excited that market is finally getting real.